Okay, good afternoon, guys. Again, this is your Prof. Zeus. Now, remember, in our last discussion, I gave you 5 exercises for you to be able to show your level of understanding about the subject matter. So, we will go through the problems one by one, and what I'd like you to do is take a look at your answers and see if your answers match my answers, and kung meron mang problems or hindi kayo nakuha, please take note of them, okay? Because that is where learning would take place or usually takes place, okay? So we have number one. The following are the current account balances taken from the records of ZAA Corp as of December 31, 2019. So what we are being asked is the total current liabilities as of December 31, 2019. Okay? So you're given 5 items there. So what we will do is we identify one by one whether it's a current liability or not a liability at all. Okay? Or probably not a current liability. Okay? So number one, accounts payable. Is this a liability? Is this a current liability? Okay, the answer is yes. So that is part of current liability because that is a supplier's account. Number two, accounts receivable. Is this a liability? To begin with, it's a receivable. It's not a payable. So this is an asset account. Okay, accrued salaries. Yes, you are correct. This is a liability. Okay, how about stock dividends payable? Okay, payable, but this is not a liability. Now, some authors use the account title stock dividend distributable. Okay, what is the stock dividend payable? Now, remember that there's a provision in our corporation code that stock corporation should not accumulate retained earnings more than its share capital. Okay, because if they have so much retained earnings, meaning more than the share capital, they will be penalized by the SEC and of course the BIR. Through what we call improperly accumulated earnings tax. Why is this? Why is this so? Because if the company has a lot of accumulated earnings, okay, and they're not declaring dividends, they're actually depriving the government of the revenue. Because whenever they declare dividends and it's payable to an individual, they have to deduct 10% withholding tax. So by not declaring, you are not giving the government the 10% withholding tax. So you will be penalized equivalent to 10% of the excess of retained earnings over share capital. Okay? And then last one is output VAT payable, 120,000. This is a current liability. So therefore, okay, to summarize the answer, so the current liabilities is 340,000, representing your accounts payable, your accrued salaries, and of course, your output VAT payable. Okay, so there you go. And then the others are not a current liability. The accounts receivable is part of your current asset, is a current asset, and then the stock dividends payable is the shareholders' equity account. Okay. Number two. Now I'd like to thank the author of a local book in financial accounting. I have taken this specific theory question from his book. Thank you very much, sir. Which of the following represents a liability? The obligation to pay for goods that an entity expects to order from suppliers next year. Now remember the definition of a liability. It's a result of a past event or transaction. Okay, it's a present obligation. Okay, so which did we satisfy? Number one, did we satisfy the first characteristic that it's an obligation, that it's a present obligation? I don't think there is because I don't think we have satisfied the first one, no? Because we are still expecting to order. Okay, so there's no transaction yet. Okay, perhaps when you if you pay it, then that becomes an advance, right? Advances to your suppliers. Okay, obligation to provide for goods. To provide goods that customers have ordered and paid for during the year. So, is this a liability? The answer is yes. So this is the liability. Okay, this is a liability. Letter C, the obligation to pay interest on a 5-year note payable that was issued at the last day of the year. So is this a liability? Not yet. As of end of the year, that is not yet a liability. Why? Because the note was issued on the last day of the year. So as of the year end, there's no obligation to pay for any interest yet. Because you haven't used the money of the company or the bank, right? And then the obligation to distribute the entity's own share. Again, this is an example of your share dividends distributable. So that is not a liability. So the answer is letter B. Okay? Letter C, number 3. Which of the following is not a characteristic of a liability? So we go back to the definition of a liability. And based on the definition, past event, that is part of the definition. Present condition, yes. Will require the use of current asset. This is not part of the definition. So this is the answer. Okay, letter D is also part of the definition. Okay, number 4. Which of the following is not a current liability? Trade payable to a supplier that will be paid in 60 days. Interest on loan. Again, letter A is a liability. Interest on loans availed on November 1, payable every quarter. Is this a liability? Yes. Is it a current liability? Yes. Okay, because every quarter, so November, December, so this is payable end of January or February 1 of the following year. So again, any liability that will be paid within 12 months from balance sheet date are considered current liabilities. Okay, shares of stock that will be distributed to shareholders as dividends. Again, I've discussed this in number 1. This is what? This is not a liability because this is a shareholders equity item. Okay. And letter D, none of the above. So what is the answer? Okay, so what's your answer? Okay, letter C. Number 5, which of the following is a current liability? Salary of the executive secretary to the president who signed an employment contract on November 30 and will start on January 1. Is that a current liability? The answer is, it is what? It's not yet a current liability because though the employment contract was signed on November 30, but the executive secretary will start, with or rendering the service the following year, January 1. So as of December 31st, there's no obligation to be recognized in the books of accounts. Interest on a 5-year loan availed on the last day of the year. Again, same. So there's no liability yet. Estimated retirement benefits of employees. Now, this is a liability. However, as of December 31st, this is considered what? A non-current liability. Okay? As a matter of fact, this is one of the non-current liabilities that is called retirement benefits obligation. Okay? So therefore, letter D, none of the above. So therefore, which is a current liability? Answer? Letter D. There's no liability as of December 31. A and B, not a liability, no liability yet. Letter C, it's a non-current liability. Okay? So, how many of you got the perfect score? Okay. Congratulations. How many of you got one mistake? Congratulations. How many of you got 2 mistakes? Okay. Two claps. How many of you got 3 mistakes? Oh, I'm not happy with that. You have to, again, study. How many of you got 4 mistakes? Definitely not happy again. Also, okay. And then how many got all items wrong? If that is the case, then you need to, again, go back to, go back and read the book. Okay? Again, thank you very much and see you in the future sessions. Okay? Thank you, guys. Bye.